Hello, in this video we will be discussing the cash versus accruals, and for the final exam review there will be total 7 or 8 videos, and I will try to keep the videos as short as possible. Okay, so let's start the cash versus accrual. In the cash basis of accounting, the measurement of cash receipts and cash payments from the transactions related to providing goods and services. So difference is net operating cash flow. It means that you will be recording uh, revenues or expense when it involves cash, right? So, and the accrual basis, it measures the meaning it records the revenues and expenses regardless of when the cash is received or paid. So the difference is net income or net loss. Okay, let's see one example quickly. So you can see that this is the cash basis one. Okay, we can see that we have the year 1, 2, 3 and total. So we have sales, we have recorded sales revenue. Okay, so the sales revenue, we have the sales revenue for year 1, 2 and 3, 100,000 each year, and cash receipt from customers 50,000 this year, and cash disbursement, see the prepayments of 3 years spent, we have paid 60,000 cash on year 1, and that is why under the cash basis we have recorded this 60,000 as an expense in year 1, not in year 2 and 3, because in year 2 and 3 we did not pay any cash. So, and you can see that net operating cash flow is in year 1 it is negative, year 2 positive, and finally in year 3 total 60,000 positive. Okay, and under the accrual basis you can see that the rent expense has been divided into 3 year, meaning we have paid the 60,000 in year 1, but we have we have recorded as an expense for year 1, 2 and 3, and see the results are same, 60,000 positive and in total. Okay, so converting cash basis into accrual basis, we need to convert the cash basis into accrual basis. So it produces a measure, cash basis accounting, called net operating cash flow, and calculated cash receipt minus cash disbursements. Okay, and accrual basis measures an entity's accomplishments and resource sacrifice during the period, regardless of when cash is received or paid. Okay, and how do we convert cash basis to accrual basis, and what to do? See, when we convert the cash basis to actual basis, so when asset increase we will add, okay, and decrease subtract. This is the key actually. Please have this in mind. So liabilities, if liabilities increases, so subtract it, and decreases, add it. Okay, so let's see one example. Okay, so Dan White maintains its records on cash basis, and during 2018 the company collected 75,000 from customers and paid 21,000 in expense. Depreciation expense 8,000 would have been recorded on an accrual basis. Over the course of the year, accounts receivable increased 7,000, prepaid expenses decreased 5,000, and accrued liabilities decreased 4,000. So this accrual basis net income would be, please pause and try to solve it and then go to the solution. Okay, this is the answer, and you can see that the cash basis, meaning this is the net cash flow, okay, less cash disbursement, and so net cash, and subtract depreciation expense, decrease in prepaid expense, add increase in accounts receivable, and add decrease in accrued liabilities. So it means that when accounts receivable increase, it means that we have some transactions, okay, some revenues, but we did not receive the cash. That is why we have added. And decrease in accrued liabilities, it means that we have received some services, but we did not pay in cash. So that is, and let's see one example. So okay, so let's see one example of the conversion of cash basis to accrual basis. This is an example. So in this example, the company maintains its books on a cash basis. During the 2018, the company collected 600,000 and paid 400,000 in expense. So we have also this information: accounts receivable, prepaid insurance, prepaid rent, deferred fee revenue, accrued liabilities. So, and in addition, you learn that the bank loan was dated September 30, 2018 with a principal and interest at 6% due in 1 year. Depreciation on the company's equipment is 10,000 for the year. So prepare the accrual basis and ignore the income taxes. Okay, so let's start with cash basis net income, that is 600,000 received and minus 400,000 cash payment. So we have 200,000, and add increase in prepaid insurance. So see that how do we record the increase in prepaid insurance? So prepaid insurance, it was 4,500. Now it has become, say, it has become 600,000. Okay, it's an increase. So we have added this one and subtract the depreciation expense. Then decrease in accounts receivable. You can see the information over here. And decrease in prepaid rent. Increase in deferred service revenue. Increase in accrued liabilities. Okay, and accrual basis net income would be, say, so this one plus this one, all these are plus this one plus this one plus this one, because I have added all of them because they have the negative sign over here. Can you see that? And they ultimately become negative, positive, plus, minus, minus. Okay, so please pause it and see the video again. Okay, thank you so much. We will go to the next section, section 2. Okay.